Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Monday, and the markets doesn't look like it's going to be a Santa Claus rally this year. Markets were down again, fourth day in a row. The question is, will they be down tomorrow? I'm not sure if that is going to be the case, but it looks like it is. We just have some weak, retail numbers coming out, and it's a difficult market right now to trade just because it is so weak. The market is so weak. Theoretically, we are in a uptrend under pressure. We moved to that last week, but that's a sign of weakness. So you should probably be no more than 50% exposed to the market, probably 50% in cash, and and then doing something else. I'm mostly short right now, and yeah, so it's kind of been a tough one. I mean, basically, weak housing numbers. It's basically the fourth day in a row that the market is down overall. Interestingly enough, the stocks, what's leading to the downside is some of the Nasdaq stocks. Of course, big tech, both Microsoft and Apple were down today, as well as Amazon. And I'm short Amazon. But let's look at today's action. The sellers basically are in control. I mean, the sellers are in control. We are down basically for a fourth day, and we're below, and the Nasdaq, and this is key, we're below that 50-day moving average, so that's showing a lot of weakness. And the S&P is starting to get a little bit of resistance. It was moving up, but it's seeing resistance at the 200-day line. So basically, not a really robust market right now. A lot of selling. A lot of people are taking tax losses at the end of the year. So the overall trend seems to be down on the market. There's two distribution days on the Nasdaq, three on the S&P. The index that's holding up the best, of course, is the Dow, which is interesting. There's some weakness in the Dow. Disney is one of the weak laggards there. But overall, it's just kind of a difficult market. I want to show you a stock that I shorted today. It's Lithia Motors, based out of Oregon. And basically, what this is it's a company that buys automobile dealerships, and automobile dealerships have been weak. As the interest rates go up, the defaults on the auto notes have gone up as well. So we have kind of an interesting thing, kind of a reverse of what happened basically a year ago. We have falling used car prices, and we also have falling acceptance for automobile loans. Repossessions right now are at an all-time high. So if you want to get into a good business that's counter-cyclical, you might want to look at repoing cars because that is the repo lots are full in Las Vegas and a lot of the other places. So it's really kind of we're starting to see that the rise in the credit, the rise in the rates have really affected the automobile market as well. The interesting thing about the automobile market is it's sort of the canary in the coal mine. Everybody looks at the housing market, but in this country, there's so many people that don't own real estate that really the key, I believe, is to look at the automobile defaults, and unfortunately, there are up. So that is one of the reasons why I did sell Lithia Motors. Again, when you short, you borrow the shares, you sell them, and then hopefully, if the price goes down, you buy them back later. I shorted it at 202.50. And when the slide was taken about midday, it was at 199.90. So definitely looking lower. Here's my scorecard as of today. I did make a little bit of money, not a whole lot, but I was short PAG. This is another automobile group. We talked about this one on Friday. This is Penske Automotive. Now, you probably know them for the truck rentals and the racing team, but they also have a lot of automobile dealerships both in the U.S. and in the U.K. Very, good company, but it is starting to move lower just based on those results with the automobile financing. That's really kind of the situation. Over 87% of all people that buy cars finance them. So the financing is very, very critical. And with the interest rate rise that we had from the Fed, unfortunately, that ripples through, and it's causing some weakness in the the automobile dealership groups. Amazon, of course, I was short that as well. There was a interesting story today from Investors Business Daily on Amazon. Of course, it is very, very weak. They're getting numbers that they don't want to see. So I was short that. I shorted Amazon basically at 85.22. So that kind of gives you an idea of where I was short Amazon. And then also short Best Buy. And of course, that is on the weakness in the retail sector, primarily the electronics retail sector. So that's also also weak, but probably not as weak as some of the automobile dealerships because people are just putting off large scale purchases like autos. So that's kind of where I'm at there. Just wanted to show you there is a stock of the day out there, believe it or not. It's Halliburton. This would be for long, not for short. And we did have an increase in the price of crude oil, moved up today about $1.30. And of course, this is probably going to be good for the oil service companies, Halliburton being one of the largest ones, of course. When you drill wells, you need somebody like Halliburton to basically do all the stuff. So if you're drilling wells, you use Halliburton or Schlumberger or some of the other companies. And this has been a particularly strong group, interestingly enough, the Oil Field Services Group, and it's coming out of a cup with handle formation. And the interesting thing about this one, Halliburton, is that it's in the top 4 groups. Now, there's 197 groups in the stock market. This one's in the top 4. So very, very interesting in terms of that. I don't own this stock, but I have been looking at it for a potential purchase because I do think that, I think when it comes to next year, we probably will be seeing increased drilling if the price of crude oil stays above about $75. So that's what I'm looking at for that. So kind of interesting. Just kind of keep your eyes on it. Let's take a gander over at some of the people coming in from TikTok. Thank you very much. Let's see. Okay, let's see. See, Dade Dade Garrison was looking for NAS. Let's see. It's going to crash soon, maybe next year. Okay, I'm looking to buy, but I'm scared of a 70. Yeah, I think right now, if you're looking to buy, I would be very careful right now. Let's see. I'm just trying to see if this is crypto. This is a crypto question we got here. I've been waiting for the downturn, but it doesn't seem like it's going to be happening. Well, absolutely. Well, Halliburton. Yeah, this is. Thanks for putting up this one, Dan. Yeah, let's that is a potentially a good long is Halliburton. So let's see if we can move over to that. Let's do some analysis on Halliburton, HAL, and see what's going on there. Okay, let's moving over to that chart. There we go. Great. Okay, so we're on the Halliburton chart and kind of see what's going on here with Halliburton. Well, and why this one might be particularly a good fit. Now, I'm not long this one, so but it did come up very nicely, cup with handle, came down, and it's tested the 50-day line. It does look like it's getting some support there. It's still sort of in a downward trend. So I probably myself would not be a buyer at this level just because I'm seeing here, this is what I'm drawing here this is the reversal line that I'm drawing. I see it come down to the 50-day and bounce a little bit, but this is a very, very good relative strength. It's a 96 relative strength. That means it's in the top 4% of all the stocks right now. So that's looking pretty darn good. And can we buy it? Well, we are almost right at the 21-day line. So this is, if you want to buy a stock, this is where you want to do it. If it's close to, if it's within 5% of the 21-day line. So this stock is coming out of a cup with handle. It's not extended, and so this would be a good buy point here. Now, this is not a primary buy point. This is a secondary buy point, but it's looking good. Let's kind of see what they're saying for the pattern recognition here. We are basically almost at the pivot. The pivot is, if I can read this correctly, $39. So we're just about $3 below that stage one, which is a very good, which is a strong base. So that's looking pretty good. So if you did want to go long, now I wouldn't recommend going in this with anything more than about a half a position. But if you did want to go in on this one, this might make a lot of sense at about this price. So not a bad looking chart, and definitely something that's worthwhile seeing. All right, let's see if we can go to some more of the questions. What do you think is repeat? Okay, just hold. Okay. All right, I'm looking here. Rolls-Royce is not the car company, but the plane company. And please, need info. That's absolutely true. Basically, what happened with Rolls-Royce, I don't know if you know this, Rolls-Royce sold off its automobile division to BMW. So really, the Rolls-Royce is a BMW, but the actual Rolls-Royce company does make airplane engines, and they are involved with a lot of that. So it's kind of two companies right now. I don't know if I have a quote on Rolls-Royce, being that it is essentially on the London exchange, and my software is really oriented towards more of the domestic exchanges, either the Nasdaq or the NYSE. So can't really probably give you much more of that on that. Let's see. All right, Halliburton is a military contract. Um, Halliburton is a military contractor, and that's another reason why we might see, unfortunately, and I really don't, like this, but we might see some action in Halliburton as well because of the fact that they are a military contractor and they go in and they do, a lot of the stuff that is contract for a lot of the logistical stuff and the what the kind of what the Seabees used to do, kind of that kind of thing. But interesting. But it is poised and it is doing well. So that could be a potential for something there. All right, let's take a look at some other stuff. Don't buy anything now, so I feel. Yeah, I think Stevie Ray, 1990. That's from TikTok. Yeah, that's not a bad idea. Right now, we're in a situation where it's really not. We're sort of in a downward trending market, and in a downward trending market, really, it's not all that safe to go long. Even though I'm showing you Halliburton as a potential candidate, um, really right now the best position to be in is primarily either in cash or short. Now I'm short. Now I do have one long position though, and that is BP. That's just sort of been hanging in there, hasn't really gone anywhere, and I don't have that big a position in it, but it you know it there just really isn't a lot right now with a lot of at the end of the year. Now normally this is a very good time of the year for stocks. Normally they go up. It's called the Santa Claus rally, but I don't think that's going to happen this year with the interest rates hikes. I think it's going to be we're going to get coal in our stockings this year. This chart here is of BP. This is the only thing that I own long. It came down to the 50-day line. I do believe that this is potentially a place that you could buy it because it did bounce off that line. Now it's often after hours 33.90, but I do suspect that it's very close to the buy point and it's pulled back. So I do think that if we just see a really average or below average market, I do think this one is going higher. It's BP, and it is acting pretty well. in the group. Now, it's not the number one group. The oil and gas integrated group is not the number one group here. I did buy this a while back, and as you can see right here. But I basically bought it for 33.28, and it's only 33.90 now. So 40 days later. So not really a great, not a great real, not a great rule, really a great move on this. I wrote it up and then I wrote it down, and then hopefully we're bouncing up again. So if this does move up, if this does move up, I'll probably be selling my position in this. But for right now, that's kind of where we're at. All right, let's take a look. Thank you very much, Charles. Thank you. Let's look at Boeing BA. That's for Charles. And of course, Boeing is also a very large defense contractor. So that's one thing you got to keep in mind with Boeing. And actually, it's been acting pretty well as of late. I mean, it's definitely been acting much better than it has been in the past. We are a little bit extended, just slightly. I mean, definitely could buy it here. 179. Now this one pulled back so far that I'm going to go here over here to the weekly chart. You can see we pulled all the way down here, really to the 120 level. That's absolutely, and then now we're making a move up. We're technically out of the buy zone, but I do think that this one isn't looking bad. It's a good point that you bring up, Charles. They did get a very large order for planes, and so that did make the last quarter a good one. 4% up in sales, but not really any significant changes in their profitability. Currently, with Boeing, there's a price to earnings ratio that says NA here, and the reason is because right now they're actually in a deficit. They are cash flow negative right now. But if this turns around, they might go positive. Here's the thing: Boeing traditionally is the U.S.'s largest exporter, so export orders can be a good thing. Now, one of the issues, of course, for Boeing is that all of the planes are priced in dollars, and that is difficult in a dollar currency that's appreciating against a lot of the foreign currencies. But it does look pretty good. I don't know if I'm convinced if I would be buying it here, but I do like the fact that it has moved above the um, the the uh, the 50-day moving average. That is looking good, and this little action is looking good here. I'm going to go back to the daily chart here. Take a quick look at it. Yeah, there we go. There's the cup, and there's the handle. And so the danger here, of course, is that the handle could fail and then it could pull back down to the buy point. So, um, what I would like to see before I would buy this in this kind of market is that I'd like to see it pull back to that potentially test the 21-day line. I would consider buying it there, but I wouldn't consider buying it right now, even though it is not really technically extended. So I would be a little bit careful in this one. Again, I'm just not as confident on going long in this market because it just is. It's one of those markets that has been not as forgiving, unfortunately. All right, thank you. Hey, Bamadoc, where do you like to put cash? In my mattress. That's the place that I like to put it, and in the can in the backyard that I have dug under the tree. Actually, it is a good idea to hold some cash right now. And again, I'm not recommending anything, but it's not a bad idea to have a little cash that is not in a bank right now, because I have been hearing, and then again, I know this hasn't been verified or anything, but I have been hearing that many banks are starting to reduce the amount of cash that you can take out of the ATM, and that tells me that we are in a liquidity issue with some of the banks. So a lot of the banks have bad loans because they're loans on cars, loans on houses, and there is a little bit of a liquidity issue in some banks. Now, again, I don't know. Obviously, the bigger banks will be propped up. Well, all the banks will be propped up by the FDIC. I'm not saying that you're not going to get your money out, but they're starting to limit withdrawals. They're starting to close branches. This is especially true in Southern California. So You want to be careful with cash right now. You probably want to have a little bit set aside and available so that you don't have to go to the ATM. Because if we get a situation where uh, they start limiting the amount of cash coming from out of the ATMs. And this is, of course, isn't mandatory from the government or anything like this. But I have been seeing limits go down from $500 a day to $300 a day to 150, and so this is an even lower. So this is one thing you want to check on. If your bank is limiting the amount of cash in the withdrawal, you probably want to take a little bit out, put it in a place that is safe. So I'm not saying there's going to be a bank run or anything like that, but there is an issue with cash right now. There is an issue with cash right now. Part of the thing is when they push the rates up, it makes it much more difficult for them to push out more cash. That's just the way it is. But they're going to have to do it because of inflation. Because inflation is actually running much higher than has been indicated. I'm afraid. I kick myself every day for selling Boeing and keeping CCL and AAL. Yeah, well, don't kick yourself. I mean, believe me, it happens all the time. Boeing has done well. But remember, here's the thing, and I kind of just, maybe it's not fair to say this, but the airlines typically, none of the airlines over a period of time, over the entire history, really have made a profit. I know that's hard to believe, but typically airlines are very weak performers, whereas Boeing, when it's right, it's a manufacturer, it's the largest exporter in the United exporting company in the United States. So, it's really the tale of 2 cities. I mean, the airlines get a lot of the flash, same with Carnival Cruise Lines. I mean, that is a little bit more profitable because it's like floating hotels, but, it's also weak. So you gotta be careful. Um, Boeing is a Dow 30 stock, and, it makes a difference. So very good, interesting thing to point out. All right, let's look at RTX. This is Raytheon, and for lack of full disclosure, I actually worked as a contractor there for a short period of time here in Dallas. So, very good company. Of course, they are the leaders in making missiles and the Patriot missile battery, which is probably going to go to the Ukraine. There seems like there's orders there, but again, I just I don't know exactly how this one is performing. Now, it came up with this cup and handle. It pulled back below the buy point, the buy point 98.02. It's at 95 right now. The question is it going to reverse higher? Let's look at the let's look at the 60-minute chart to see. Yeah, well, it's attempting to with some buying on the other end, but I just don't look. Yeah, it's above the 50, above the 200-day line, which is good. Above it's above the 21-day line. The question is it going to reverse higher here? It doesn't look like it. So I would wait on this one. I'd watch this one. I wouldn't buy this one until we get a solid reversal. So I'm going to draw a little line there. This is a reversal line, and we're just not there yet. It needs to move above that buy point, and that's where you could probably snag some shares. I wouldn't go hard on this one. Just this market is not looking as good as it was even a month or two ago. So it has a checklist. It's not that good. I would watch this. I probably would not be a buyer, Charles, of RTX here. I probably wouldn't, just based on based on what I'm seeing. It's just it doesn't look like a buy just because of the market is in a downward trend. It's moving lower. It may reverse higher though. If it reverses, that's where you could probably pick it up long. But other than that, I probably would not do anything here. All right, Mr. Cheat. Looking at the two stocks that are very interesting today, of course, Tesla and Apple. Apple was lower, and this is the biggest stock that is held currently by Berkshire Hathaway. This is Warren Buffett's largest holding, and it was down today again. I just think that everybody and their brother wants to get out of these big tech stocks because they know that the earnings just next year are not going to be where they were. They're just not going to be. as good as they've been in the past. So a lot of people have to get out of these stocks. The only problem is there's not any buyers. Nobody's bidding these. So I definitely think this is potentially a short. I didn't short this one only because I didn't like the fact that it had pulled, it had been down 1, 2, 3, 4 days. If this thing rallies tomorrow, I probably will short this. If it rallies tomorrow, typically a stock will move down about 4 days, and on the fifth day, it will recover a little bit. That's a good place for a short. Um, I think that this one is going lower. I really do. It only has a 56 relative strength. I mean, 56% checklist. So it's pretty weak considering how significant this stock is. 32 relative strength on the relative strength line. So it is not as powerful as it once was. 68% of the market's doing better than the stock, and this one should do at least 50%. So, not as good a stock as it was just a few months ago. Really, it's in a downward trend, and it looks like it is moving to the bottom of this consolidation, which is right here at about 130. It's at 132 currently. So I do believe we're going to see it. If it bounces at about 130, then it will move higher. But if it moves below about 130, then I think it's a good potential good short there because the next level of resistance is probably at about 117 or so. So that might give us an option to make a little bit of money on here. Um, on the fundamentals, Apple is it's not doing badly. I mean, it's up 5% in terms of sales, up 4% in terms of profit. So it's not doing poorly in that sense. But I think that overall, just not looking all that good. Now Tesla, I had a short on Tesla this morning, which I had to cover very, very quickly. Why? Because my timing was off. That's why my timing was off on it. But I did cover it very, very quickly, and it did move up. Now the thing about Tesla is, after it's moved up like this, that's where you wanna consider possibly reshorting it. So let's look at Tesla here real quick. There we go. And all right. So we did have a down day today. This is really interesting. 149. Um, and the funny thing is I shorted and I closed too early. Amazing. And then it went down some more. I tell you, this was a crazy day. Let's look at the 60-minute chart here. Yeah. Okay. It did have a little bit. I was afraid here. I did close it early. I came in, I shorted it, and then as it came up here, I closed the short. And interestingly enough, it was right at 200. That's where the resistance is. So 200 is the resistance for for um for Tesla. It's amazing how Tesla can move here. I mean, look at this. This isn't that. This is not that. This is basically uh, 240 all the way up here to 150, and that is in the space of not a very long period of time. So 1, 2, 3. So not very many days. It's moved that low. The question is it can we do anything with it? Well, I've learned my lesson. I'm probably gonna stay away from Tesla for a little bit because I don't think I'm in sync with it as much as I am with some of the other stocks. So I'm gonna probably take a breather there. But let's take a look and compare Apple and Tesla to see if we can. Let's go over here. Gotta go over to the there. All right. So this is well, trying to get the correct chart up here. So bear with me. There we go. All right. So there we go. Oh well, heck. Let's see if I can. Let's see if I can get the right chart up here. Okay. So you're not seeing anything on the screen, I realize, but just in a second we'll get this up. 7-1. Now I just want to show 6 months here, and I want to show Tesla relative to Apple. These are both, of course, mega caps. And let's see if we can get Let's see if we can get this up for everybody on TikTok. I mean, on YouTube, excuse me. Let's go over here. There we go. All right. So this is the story with Apple right here and Tesla. They're both performing poorly. They're both going down because mega cap tech has just been hurt. But Tesla is underperforming Apple. That's very interesting. And of course, it was overperforming it up until about 3 months ago. So very interesting. If you put a dollar in Apple stock 6 months ago, you'd be at about 95 cents in your pocket. Or if you put it in Tesla, you'd probably only be in 65 cents. So definitely not as good. So I wouldn't recommend, unfortunately, I wouldn't recommend either of them right now. And shorting is, well, I'm trying to make it work, but I haven't been able to make it work yet. I phrased it poorly. Any opinion regarding money market funds? Oh, very, very good. Very, very, very good. Or short-term treasuries. Oh, okay. It's always a good idea to have. Absolutely. No, no, it really is right now. I didn't want to scare anybody out there with cash, but I definitely think it's a good idea to possibly have a few hundreds, put it in maybe in a nice space in your house, just in case there's a problem with a bank run. I don't think there's going to be, but always a good idea to have a little bit of cash around. Um, on the money market funds, again, I would, money markets have been, that's very, very short term debt. Right now, cash is king. I mean, it's definitely been the performing asset. Um, I mean, that's one of the reasons why when a market starts to move down like this, and we definitely are in a situation where it is, um, really the only two things you can do is go all to cash or short. So I think that's really kind of where we're going to be probably after the first of the year. You really don't want to go long in a market that's declining overall. You want to be short or in cash. Now, here's what's driving a lot of this is that a lot of these funds are rated every year. And so at the end of the year, they sell their losers and they take their tax losses. That's going on right now. There's an awful lot of funds with losers, and the place where they're hiding in plain sight, most of these funds are in the big cap techs. I'm talking Microsoft, Apple, Tesla, Amazon, those kind of companies are going to see a lot of selling pressure, and the reason is very simple: is that they have declined. There's many funds in them. They have to kind of stop the bleeding, but they can't just sell all at once because that would pull the market down. So they're waiting for these little upticks to sell, and that's one of the reasons why, if you get an uptick like we did today if you get an uptick like we did today in Amazon, that is a place that you might want to look at shorting. This is what I did today. Let's go over here to the Amazon chart. Let's see here. Gonna go over here to the Amazon chart if I can get it. And there we go. Okay, so this is not the Amazon chart. Which It's Tesla. Yeah, I gotta get rid of that one. Anyways, I didn't do it right. But anyways, there is a lot of pressure right now on the big cap tech stocks, and I do think it's going to push them lower. I really do. So that's why we ought to be looking for shorting opportunities. How do you handle the wash sale on your losses, Jim? Well, here's the thing. The way I trade is that I just trade for profit, and then if there's a wash sale, well, there is the wash sale rule. I just go ahead and book it and and see how it goes out. I don't time my sales for tax. I probably should, but I don't time my sales for tax. I just go ahead and take the tax loss on them. Part of the reason that we're seeing a lot of sales, people, of course, what the wash sale rule is, when you sell it, you have to wait 30 days in order to buy it back, a stock back. You can't, or you don't get the loss. So, but we're going to see a lot of people, a lot of stocks. That's one of the reasons why this will push a lot of the big tech stocks later lower, because a lot of these big funds, they won't be like I am and buy it back if they can make a gain. What they'll do is they'll sell it at a loss, and then they'll wait, and they may not buy it back for a while. So I think that's going to happen with Apple, Microsoft, and some of the large cap tech stocks. So I really appreciate that. That's great. That's a great comment. It's really a great comment. All right. Well, I have wasted another 35 minutes of your time. I'll be back tomorrow with hopefully some information on the shorts. I am trying to compile a list of stocks that I want to possibly look at going short on as well, and put that out to everybody. Um, if you're not already a member of the Action Trailers, super easy to do. Just go to www.dallas Trading Floor, or if you're watching on YouTube, on TikTok, just go to the link in the bio and just click on that, and you'll be able to sign up. Super easy for that. So until tomorrow, thanks everybody, and I hope that everyone's getting ready for Christmas and excited about that. Smash the like button if you can, and subscribe. That would be great. Really helps us out. And if you're not already a member, again, go to www.dallas Trading Floor. I'll be back tomorrow at 5 o'clock. Happy trading, everybody.